As an investor, you must admire Nvidia. The stock has grown 194% in 1 year. It has grown a massive 2,800% in the past 5 years. If you had not invested in Nvidia before and could have only caught the last month of its growth, you would still have made a highly desirable 25%, something the S&P 500 would have taken 2.5 years to gain. In this video, I will tell you how you could make even more money with Nvidia and make it fast without investing a fortune. Before we jump into the trading strategy, I want you to look at this news headline. Nvidia's Blackwell AI processors are sold out for the next 12 months. This headline alone can help you decide where to invest your money. There are over 3,000 stocks only on the Nasdaq, but you need a real gem to invest your hard-earned money in. This headline indicates where Nvidia is headed. If you need more proof, I have linked Nvidia's investor presentation of October 2024 for your convenience. Go to Nvidia's website and read the entire PDF document before making up your mind. I would like to mention one point, though. It is about Nvidia's data centers. These data centers are called AI factories. They will soon become a $2 trillion industry, which Nvidia will construct and lead. The investor presentation states the entire computing stack has been reinvented, from CPU to GPU, from coding to machine learning, from software to generative AI. An investment in Nvidia can be the finest part of your portfolio. Let us now move to today's trading strategy for Nvidia. You see, at $135 per share, Nvidia is not a cheap stock. To buy only 100 Nvidia shares, you must have $13,500 in your trading or investment account. Even if you have that much money in your account, it would not be wise to allocate all of it to Nvidia. This is where this strategy comes in. With this strategy, you will trade 100 shares of Nvidia with only 1/14 of Nvidia's current market price. You may have guessed that I am talking about buying call options instead of Nvidia shares. I often talk about selling put options first to buy a stock for investment. That way, you can buy a stock at a price cheaper than its market price. Even if you want to do that in Nvidia's case, you will still need to have enough money in your account to be assigned the shares if the price fulfills your put option requirement. This will be called a cash-secured put. But for this strategy to work, you need to have only the option premium in your account. As you can see on the current option chain of Nvidia, the price for one contract of call option for the $135 strike price, which means striking at the money, is only $1,050. That simply means paying $1,050 of premium to the option seller will give you control over 100 Nvidia shares until the option expires on 22nd November. I chose 22nd November because I do not like to go very far or to stay very close to the day I buy the option contract. That way, I can give the stock a little bit of time to recover if it goes against me. In this case, the expiration date is about 40 days away. We buy the call option at the money, or very close to the money, because we want to be in the money right after we buy the option. That means our intrinsic value will start growing immediately as the stock begins to grow from our strike price. The stock must grow after we buy the call option because we are subject to time decay. That simply means if Nvidia does not move up at all, the price of our option will still decrease little by little until it becomes zero at the end of the expiration date. By buying a call option, we set ourselves against time and the stock price. But as you can see in this image, which shows about 2 months of Nvidia's stock price from the 12th of August to today, 14th of October, you can receive very precise signals of when you should buy the call option so that you can find your trade in profit right after executing your trade. During these 2 months, you could buy 3 call options following 3 buy signals, and all 3 would have been winning trades. Here I have used UT-Bot on the TradingView charting platform to get the buy and sell signals. UT-Bot is an algorithmic trading indicator made by trader Yo Adrian. The chart is an hourly chart. Do not use any time frame smaller than that for trading options for this strategy. I have used Heiken Ashi for the candle pattern to cancel the market noise. But you could use regular candlesticks, which will make the chart look like this. To implement this strategy, you do not need any specific preparation. Wait until you see a buy signal. Wait for the candle to be finished in green, and the ATR line to become green and fall below the green candle. Buy your option contract as the second hourly green candle begins. Try to get filled at the mid-price between the bid and ask. If your trade is not filled within a minute or two, go for the ask price. In the grand sense of the matter, 10 or 20 cents do not matter. Hold your position until you see a sell signal on the chart. Let the red candle be finished. Exit the market at the beginning of the second red candle. You can trade both call and put options, but for this strategy, and since Nvidia is a stock that is mostly rising, you may choose not to trade put options. If you follow the trade signals given by the UT-Bot indicator, you will win at least 65% of your option trades, which will increase your investment by more than 500% within a year. You don't need to look for new stocks every day, and you don't need to look for new strategies every day to trade those new stocks. Master this strategy, trade Nvidia options, have patience, and be confident as a trader. If you have a small account, trade only one contract at a time. When you have a few winning trades, you may scale up. For bigger accounts, the strategy remains the same. Trade 2, 5, or 10 contracts at a time. Close some contracts when you are in profit, and let the rest run up to the sell signal. This strategy will keep you organized as a trader. You will trade less, trade selectively, but make more. Besides, it will help you to remain in the market to maximize your profit instead of exiting the market with a small amount in return.